This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, August 2nd show. I'm committed to providing you the knowledge needed to be successful in every area regarding your finances. Knowledge is power, and that's what you'll receive here from listening to my show. If you're hearing the show at a different time or day, you're listening to a rebroadcast, you can call the show at 1-855-400-1150 or go online at themoneyhour.com to discuss anything that we've talked about in studio and to connect with any of my guests. And in studio right now, I have Ryland Taniguchi with Keller Williams in Bothell. And we're going to be talking about real estate cycles and when to invest in the real estate market. Ryland, first time I've had you in studio. I know you've been on other shows and have been asked to be to give your expert opinion on the real estate market and some of the things that you think are happening and what's coming up in the future and the cycles and the trends. So thank you so much for joining me.
Thanks for having me here. It's a lot of fun.
Yeah, it is a lot of fun. And going a little bit about Ryland. Ryland has been investing in real estate since 2000 and has certified in construction management from the UW. He was flipped over 45 homes and has owned 15 rental properties. And with this, has the experience needed to share with all of you listeners in the real estate market, especially on the investment side. So, Ryland, let's go ahead and start out with talking a little bit about how the real estate market moves in an 18-year cycle.
Yeah, I got to tell you this funny story, Tina. The first home I purchased back in 2000, I believe it was in Spokane, Washington. It was this little 2-bedroom Rambler with energy efficiency. I think it was built in the 80s, something like that. And I remember the mortgage was $550 a month.
Wow.
And I was sweating bullets. You would probably have hated me as a customer. I would call my loan officer every single day. How's my loan doing? Do I need to extend this document, blah, blah, blah. That seems like a long time ago, 14 years. And, funny thing is, for 14 years, I've never heard of a single time anybody talk about a real estate cycle. Never heard of it.
Yes.
It's not common knowledge. And so anyway, I was writing a book. It's called The 2020 Club. It's not published yet, but I'm halfway through it right now. And what I was interested in was just going back in the history in the United States and looking at land sales. And turns out that first land sales was in 1800. The first real estate crash happened 18 years after that in 1818, 1836, 1854. There was a little bit of a 15-year cycle from that time during the Civil War. In 1869, 1888. So it was just interesting pattern back in history. Why did real estate go in these almost exactly an 18-year cycle?
Yeah.
And so I looked at this, and that got me a little curious because nobody, I've been in real estate a very long time, never heard of a cycle. People will tell you there is no cycle, there's no such thing, blah, blah, blah. You can't really predict markets, things like that. And so I wanted to research this because obviously there has been an 18-year cycle in this century. But there's been a pretty steady pattern of 18-year cycles. And so what I found out was that there were two exceptions to the 18-year cycle, and it happens, one, if there's a war, which there was a crash in 1907, and then the crash after that was in 1925. For a real estate crash. Okay. And so according to the 18-year cycle theory, then there should have been a crash in 1943. But there was no real estate crash in 1943. And so anyway, in the book, I started researching this. It was an interesting topic. And I found out, during war, we had a lot of our over 1 million men over in Europe. There was nobody to speculate in real estate back in the 40s.
Sure.
So there was no crash at that time. There was another anomaly in the 18-year cycle pattern. That was in the 70s, right? According to the 18-year cycle pattern, the real estate market goes up and down every 18 years. Well, obviously, that didn't happen in the 70s. In 1973, the real estate market crashed. And in 1979, that was a 6-year gap. So I studied this. I said, why did that happen, right? So anyway, in that situation, there was a currency collapse. A lot of people don't know this, but there was a Bretton Woods after World War II that was signed. And America became the reserve currency of the world and what was called the gold exchange standard. And in 1973, Nixon took us off the gold exchange standard, and it was a result of what was called guns and butter, so Vietnam and all the welfare stuff from Lyndon B. Johnson's Great Society. All that caused a collapse in the dollar in the 70s, and that broke up the 18-year cycle. So anyway, the interesting thing was I was doing a lot of research on this topic because it just got, kind of fascinated me. And I found an economist at Berkeley, that it was in 1997, predicted that the next real estate crash would happen in 2008, right? So when I read this, now hindsight's 2020.
Of course.
That's the name of the book, 2020 Club. I read that. I said, okay, how could it be possible that an economist nailed exactly which date the real estate market would crash? So I just started studying this guy, all the stuff he read, all he wrote, and he did all this just historical analysis, and it was just fascinating.
Yeah.
And so anyway, he predicted that 11 years before it happened. So according to this theory, the next real estate crash would happen in 2025.
Okay.
But there's a lot of caveats to that. If there's a currency collapse, and as you know, the government's printing a lot of money.
Yes.
There's always that possibility, although I think it's very slim that would happen. Or a war, right? There's some exceptions to the rule.
Sure.
And then there's definitely signs that you look at. There's a thing in real estate called cap rate compression. When it's getting really hard to get cash flow on your properties, it's a term called cap rate compression. When construction is going like crazy, there's certain signs that you can look at that will point, to a upcoming crash.
Well, I'm excited to your book coming out and definitely being able to share that information with my listeners. So when is the best time to buy real estate, Ryland?
Well, most people would say it's always a good time to buy real estate, but that's not necessarily true. I'm also do a lot of stock trading, and in stocks they have terms that they call a contrarian time to buy stocks, and they have a momentum time to buy. And I think that's a great term to use for real estate as well. And if there is an 18-year cycle, there would be a 3-year period in that cycle where it's the best time to buy, and that period is just ended. There's a 3-year period where you will, anytime you can buy real estate less than it costs to build. Okay. It's called a replacement cost. You always know that that's absolutely the best time to buy. But the other time, the great time to buy is when you can't get financing. When there's no financing available,
and that makes total sense.
It's usually so. The good time to buy is usually, inversely related to the amount of financing available.
Sure. And what about when you're talking about, the cost of money? Because we know the cost versus price. It's always better numbers come out better buying at a lower cost versus a lower price. And so the cost of money is so low right now. You sell real estate. What are you telling your buyers right now when they're looking at getting into the market? Yeah,
there's a great, the way I look at it, unless the currency collapses or unless we get in a war, I look at it like there's an 8 to 12 year window where it's going to be pretty good. So I'm pretty conservative. So I would personally be looking to buy for the next 5 to 6 years.
Okay.
As an investment. It's always, buying for yourself is totally different. You buy a personal residence. You can always do that, right?
Exactly.
I'm talking strictly on investments.
Okay.
I think there's about a 5 to 7 window where it's a pretty safe bet to buy for that strategy.
Okay.
But I'm not one of those people that will tell everybody to buy all the time.
Sure.
There's going to be a time where I say don't buy because. And you'll know when that happens when you said you had an 80-10-10 loan.
Yes.
I guarantee the 80-20 loan will come back where there's zero down.
Yeah, and it'll be interesting to see how lenient the banks are going to get with financing. I mean, we've seen the jumbo market, the jumbo arena has gotten a lot more aggressive than they ever. I mean, they were lending quite a few years ago, but now they're lending in a much stronger fashion. And so that was surprising on the jumbo arena. The second mortgage is coming back for the purchase money second. We've got a lot of opportunities for the zero down loans. Where I would get a little worried is when they start coming back with stated income, unless you're self-employed, strong credit with a 20% down payment. I think having an option available for a stated income for those type of buyers really our market needs. But if they come back with stated for W-2 income, that's where I'm going to start to get a little worried in regards to how they're lending. So what about the future of the U.S. dollar and how that affects real estate? Can you talk a little bit about that?
Yeah, the U.S. dollar has a huge effect on interest rates and a number of things. And it's very, very hard to understand how that works. It's very complicated. America has certain policies, I love this country. We do a lot of great things for the world. We do a lot of foreign aid. Some of the things we do, though, are also very beneficial to us. when we give foreign aid to other countries, we're not just helping them out. We're also taking our U.S. dollars and putting them in their central banks. So that way our currency is stronger as the de facto world currency. So the thing is that in the currency worlds, right, the euro is really weak, the yen is really weak. China has a strong dependency on the United States because the euro and Japan are very weak as well. So they need the United States to be, it's one of its top buyers. So anyway, when it comes to the currency, there are tremendous risks with the currency, but it's relative to everything else, right? It's everything's kind of pretty bad right now. So most likely risk that'll happen is there's a thing called SDRs, special drawing rights, that in the future there will be a basket of currencies where they put a little bit of yen, a little bit of dollars, different currencies, $0, and kind of do a blended currency. But the bad thing is that would take us off of the U.S. standard as the U.S. Reserve currency standard, and that would have a wrecking ball effect on interest rates and things like that. Yeah,
it's a lot of information, and in a short period of time to get all the information out, but a wealth of great information. And I just love listening to you talk and educate listeners in some different arenas than sometimes we talk about. Now, when the real estate market goes completely out of control, what are you advising?
Interesting thing is that when real estate goes out of control, right? In history, it's always been followed by a depression, and it's always been preceded by a stock market crash. So usually in a cycle, there's about 2 to 3 stock market crashes, and that stock market crash always leads up to that real estate, crash.
And it's because in employment, I tell people, if you can't guess what real estate is, a lot of people have a lot stronger opinion on what employment is. So the stock market crashes, employment is bad, and it's directly tied to real estate.
Yeah, and some interesting thing is that if you study a thing called shorting stocks, and I can't talk about it because I'm not licensed to talk about that. There's another thing with gold. When stocks and real estate tend to go up, gold prices tend to go way down. So there's some counter-cyclical things that you probably need to look at to have a really well-balanced portfolio.
Okay. So what is your experience with deflation, inflation for the future? What do you see?
Yeah, everybody is assuming that because the government's just out there printing tons of money, we have a $150 trillion deficit, everybody's assuming interest rates are going to go up. But what they don't realize is that America has got a really sneaky thing called we're the reserve currency. What we've done is we've manipulated the way oil is sold.
Okay.
A big thing is America has had a presence in the Middle East because we want to force the Middle East to accept oil in U.S. dollars, right? So there's a lot of things that we do as a country to keep our status so we can keep printing all this money without the consequences of high inflation. And, if you look in history, it's actually more likely that we'll end up in deflation. If we go into hyperinflation, it is more likely that we'll start that process with a deflationary cycle. And so that's really crazy. How do you predict? How do you invest, and how do you plan for the future if prices are going to go down? Is more likely before they go up, right? So, but there are specific strategies. We probably don't have enough time to talk about that today. So
we'll have to have you back to go over the specific strategies.
Yeah, there are definitely specific strategies. But you got to wait. You got to have kind of plan for both deflation and the possibility of hyperinflation.
Yeah. Wow. Great information, Ryland. Thank you so much for coming into studio. Definitely have to have you back. And if you want to get contact with Ryland, please pick up the phone. Give the show a call at 1-855-400-1150 or go online at themoneyhour.com, and you can re-listen to any of the segments that I've had in studio. And definitely, it's been a great show here today. Ryland, again, thank you for coming into studio. Really appreciate it.
Yeah. Thanks for having me.
And this is Tina Mitchell, your host and mortgage expert, signing off for the day. Enjoy your Saturday, and I look forward to talking with you next Saturday right here on 1150 AM KKNW.